Hey folks, welcome back to another BitTopics video. Today's going to be a little bit shorter of a video. We're going to dial back to the beginning, since a lot of you, or at least some of you that reached out to me, also lost money with options because they were betting on an upside, and then when they had a huge downside, losing that amount of money that you deposited. I decided to make some videos showing you how to get better trades, not only safer trades, but also how to squeeze more money, squeeze more premium out of certain situations like what we had on Friday, and also how to start trading volatility instead of having to predict where the market will or won't be. You just short volatility. So once volatility spikes and you're able to get at the top, you're able to sell volatility. So you're not going to be trading Ethereum, Bitcoin, Solana, whatever. You're going to be trading volatility. You're going to be shorting volatility on that level. So the actual underlying price and the range, that will be way less important because you're going to be looking at volatility instead of the underlying asset of the pricing of these options. But if you are a spread trader, or if you are an option seller, like you sell options like we've been teaching you here, how can you get better premiums? The easiest way to answer is by showing you implied volatility. Now, we've talked about implied volatility before. So let's say now the price here of Bitcoin is going down, of Ethereum, sorry, is going down. Now it's going back up towards the 4,000. So I do believe that now the market's going to stay above 4,000 and I want to sell a put. I want to sell a 3,900, 3,700, whatever that may be. So I want to sell that. Is this the right time? When is the right time? Should I just look at the price like you see right here that it says 3.38? Should I just wait for the price? No, you should be looking more at volatility because the pricing is reflected due to volatility. Volatility is part of what prices, of what gives these prices to options. So if volatility is very high, even though the price is the same, if the price continues to stay the same, volatility will increase the price of this option. So you don't have to wait for a leg down or a leg up. If volatility moves, even if the asset stays still, you're going to see the pricing go up. So where do we see volatility, Everton? How am I able to, keep up with volatility and then see if volatility is about to spike? Then I just wait a little bit, see that spike. Once I believe that, hey, this is enough, or we had, for example, a huge candle, a huge spike of IV like we had on Friday with that dump, like we had on other occasions, then you can pretty much get a very good entry when IV is through the roof, because IV will eventually crash back down, because IV is like a balloon. Once it inflates and then it starts to deflate once again. So where do you see IV? Well, here, if you switch to table, you can see the IV per leg. So each leg has their individual IV, but you can also see the IV for Ethereum, for Bitcoin. So for Ethereum, you're going to be writing ETH DVOL. So this is the ticker for Ethereum's volatility. If you want Bitcoin instead, you're going to put BTC DVOL. And this is going to show you the volatility here in the charts, like you were looking, for example, at a token, Ethereum, Bitcoin, Solana, whatever, because it shows volatility in a chart just like you are used to. So once you see, for example, look at this. This was Friday. So IV started going up, and then boom, went through the roof, which was a 12, 13, 14% increase. Then it crashed by 7%. And then it went up again. This was for the next short that the big whale on Hyperliquid did, but then it crashed down very, very fast. We had a huge spike again on the 14th because Trump said that he is indeed going to be fighting tariff wars with China, but then it went down again. So these moments right here, so this one right here, this one right here, these right here are moments when you should be selling options. So now, it doesn't mean that here is not a good time for you to sell, because if you find a good premium, if you find a good balance, you're able to open a position. But when you are in these situations, these are going to be essential for you if you're selling options, or essential for you if you are shorting volatility, which is what we're going to be talking in the next videos. So shorting volatility is different than selling options. Selling options is also a strategy where you want volatility to drop because that's going to drive the premium. So selling volatility is part of these strategies, but it's not just that. There's also a lot of other strategies that you can use when you are shorting volatility and you have, or you don't have, a direction or a price prediction for the underlying asset. So by looking at the volatility here for Ethereum, or by looking at Bitcoin's volatility, which is just devol, so no BTC for Ethereum, just add Ethereum in the front of it, you can see that Bitcoin just had these spikes, but is usually very, very neutral. So it had the spike on Friday, which went up 61%. Then it dropped by 32%. And then it pretty much never saw this again. So if you're selling spreads, you know, collecting premium, there's a lot of people who were able to open at these percentages right here, spreads, condors, butterflies, a bunch of other strategies, especially those that short volatility. And this is a guaranteed money in your pocket. It doesn't even matter if you got wrong in direction. It doesn't even matter. Mainly because when these prices exploded, quotes were so high, premiums were so high that even though you got direction wrong, as long as you were inside a certain margin, a certain price range, you got premium. You made money because the amount for what you sold for at this huge bubble, when this bubble burst, bubble of volatility burst, you sold at extremely high prices. Then now, even if you were wrong, you can still close with a profit, which wouldn't be the case if you were like doing this right here. Because this right here, yes, we got a huge spike in price, but still, if you got the direction wrong, your premium will get more expensive and you have to pay more to close than what you sold. So you're gonna have that loss over there. So using the volatility index is very, very important for you to get a little bit more premium out of it. So the way that you would do this would be to open the topics, look for the options, do your technical analysis. If you believe you're going to sell a put spread or, you know, sell a put, then you go right here and you say, is this the right time for me to sell right now? Or am I selling at the bottom? It doesn't make sense for you to sell an option right here or right here or right here. It does make sense for you to sell in the middle because, okay, the premiums are going to be average. They're going to be okay. They're going to be what you should expect. But then these are the best places for you to sell these options. At the top right here, especially if you use indicators like Bollinger Bands, RSI, MACD, these are indicators that call for a top. So when you see this top forming, it is time for you to do that strategy, try to short the volatility. So hopefully this is able to make you a better trader, make you more money with safer margins, with less risk, and we can recover from that huge blow that we had on Friday. So hopefully you are also recovering financially, mentally, whatever you need it to be. As always, if you need anything, if you want to learn something specific that I haven't covered here in the channel in any videos, comment down below, comment on Twitter. Now I am very active once again back on Twitter. So Twitter is where you're going to be finding me for the fastest reply. Thank you very much. I'll see you guys on Monday. Have a safe weekend, a great weekend. Take care. Peace.